Everyone, welcome back to Cheddar Movers. Stocks slipping for a third straight session as Wall Street stands by for commentary from the Fed on monetary policy, I should say. Now, Fed Chair Jerome Powell, he's going to deliver the Fed's annual and the semi-annual monetary policy report to the House of Representatives Financial Services Committee on Wednesday, followed by testimony before the Senate Banking Committee on Thursday. With us now to discuss is Eddie Ghabour, who is the co-owner of Key Advisors Group. Eddie, great to have you here with us.
Thank you for having me.
Absolutely. All right, let's dive right in. Do you expect the Fed to lower interest rates this month?
I do not, and I think that's going to be a big disappointment to the markets. You know, a couple of weeks ago, I think 50 basis points was priced in. Then when we had the jobs report that came out last week, which was fantastic, I think now the market's pricing in 25 basis points. But I just don't see the Fed flip-flopping again because they've already done it twice in the last 6 to 7 months. And for them to cut rates this early after they just told us in March that basically 2019 was going to be no hikes, they didn't even discuss cuts, I think that could potentially hurt their credibility if they continue to flip-flop in such a short period of time.
Well, plus we look at the economic data, and since the first quarter, I mean, we did have some spotty data, U.S. data in the first quarter, but the economic picture has only seemed to be stably increasing and improving, with the latest jobs report on Friday being one example of that, right? I mean, I guess the Fed could point to global concerns and uncertainty if they do decide to cut rates, but the economic picture at home doesn't seem to be that doom and gloom.
Without question, I think domestically we're on solid ground. But to your point, I agree 100%. The concern is the global slowdown. And we're going to really see as these earning reports start to come out in the next couple of weeks how much the tariffs or whatnot hurt earnings. Because if earnings come back pretty good or exceed expectations because the bar is set pretty low, then that's another reason as to why the Fed should not cut. But I think the point is they raised in December when they probably shouldn't have, in my humble opinion. And it's kind of like giving this quarter-point cut that the market wants. It's kind of to try to, minimize what they did in December. But I think they're going to disappoint, and I believe there'll be a potential for some decent downside if the Reserve does not lower these rates by 25 basis points in July.
How much does Fed Chair Jerome Powell run the risk of kind of scrutiny around political influence if he does announce these rate cuts going forward?
Well, that's another interesting dynamic that they're dealing with, right? Is trying to have that balance. And I think one of the things he's going to portray when he speaks tomorrow is their independence. And I think it's important that he does because, you don't want any type of politicians influencing the Fed, right? The whole point of them is being independent and making policy based off of where we are economically and where they think moving forward. Whether you think they should lower or raise is a whole nother point. But I think he's going to show their independence. And that also has to weigh on their mind with the political pressure they have. The lower rates is they don't want that perception that they're being influenced. Yeah. So it's going to be interesting to see how he lays this out for us this week.
We got a tweet from President Trump just before the market opened, basically implying that India is going to be the next country where he wages a trade war. Look at this tweet here. India has long had a field day putting tariffs on American products, no longer acceptable. But surprisingly, the market did not move on that. Why do you think so?
The market's almost become numb to this at this particular point. I really believe the biggest thing that the market in regards to tariffs is most focused on is China and the U.S. If we do not get a trade deal within the next several months, then I think the tariff talk with China starts to ramp back up again, and then you have the severe downside risk to the market. And if we don't get a trade deal done by the end of the year, I think next year could be a very, very interesting year for the markets, not as happy as we have been this year.
The only thing that I think about is President Trump wanting to go into this 2020 re-election campaign. You got to think that to a certain base, not the base that gets riled up by the immigration talks, but a different base, they want to see the stock market go higher, and by some sort of engineering, perhaps President Trump could do that.
Here's the interesting thing. I mean, a strong stock market, whether we like it or not, it's debatable, is good for the economy. Okay, when you look back, there's been years that the economy hasn't grown well, but the stock market did well. But find a time period where the stock market's suffering and the economy's doing okay. So it does have an influence on that. And to your point, I think in order for this administration to get reelected next year, the economy has to stay strong and the market has to stay stable.
But picking fights with the sixth largest economy now, so now we're essentially going after the second largest economy in China, one that helps us. China and the U.S. making up $30 trillion of global GDP, plus India being the sixth largest economy, and expansion efforts galore for the tech industry, Apple citing their interest in India, Samsung, so forth. How much pressure does that put on these companies trying to grow out their business and identify new consumers when the president is ramping up a tariff tension potentially with the likes of India?
It presents lots of challenges because, as a business owner, a CEO, you're trying to find the best opportunity to put headquarters to go after market share.
Right.
And if you don't know what the rules of the game are going to be in regards to tariffs, then it makes it very challenging. So it's a high-risk game when you're doing these negotiations with tariffs because, again, it could work beautifully and have agreements and everything is good and the economy soar, but it could also backfire and then you have a full-blown global trade war, and that, in my opinion, would be absolutely devastating to the entire globe.
We've got third quarter earnings season upon us, set to kick off next week. A 2.6% drop in earnings is what we're anticipating. What are you expecting?
I think the banks that are, I believe Citigroup is one of the first big banks that's going to report on the 15th. I think they may actually surprise a little bit. It's going to be interesting. The one good thing is I don't think there's a lot of expectation on robust growth with this quarter, myself included. I think there'll be some disappointing numbers. It's going to matter on if it's a total global disappointment across the globe with all the big names. If that's the case, then I think you see a next leg down and then pressure on the Fed to lower rates. It's kind of all intertwined together.
All right.
Eddie Ghabour, we got to leave it there. Eddie's the co-owner of Key Advisors Group. Thanks for stopping by.
Thank you.